Hey everyone. Welcome back to the channel. If you're investing in ETFs or just getting started with your portfolio, chances are you've come across two giants, VOO and VFV, both tracking the legendary S&P 500 index. But here's the big question for 2025, which one should you buy? VOO, the US version by Vanguard, or VFV, its Canadian twin? Today, we'll dive deep into performance, taxes, currency risk, dividends, and long-term strategy to help you make the best choice for your situation. Stick around, by the end, you'll know exactly which ETF fits your 2025 investing plan. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. Let's start with the basics. VOO, or the Vanguard S&P 500 ETF, trades on the NYSE in US dollars. It tracks the S&P 500 index, which represents the top 500 US companies, think Apple, Microsoft, Amazon, and Nvidia. On the other hand, VFV is the Vanguard S&P 500 Index ETF, traded on the Toronto Stock Exchange, TSX, in Canadian dollars. It holds the exact same companies as VOO, but here's the twist, it does not hedge against currency fluctuations. So both track the same index, but your returns in VFV depend not only on the US market, but also on the value of the Canadian dollar. Let's compare the performance over the past 5 years. VOO, US, around plus 75% total return, as of late 2024. VFV, CAD, around plus 82% total return. Why the difference? Because of currency movement. When the Canadian dollar weakens against the US dollar, VFV investors benefit since their returns are converted from USD gains into a stronger CAD value. But remember, this can also work against you when the CAD strengthens. That's currency risk, and it's one of the biggest deciding factors between these two ETFs. Now, let's talk about something that eats into returns: fees. VOO has an incredibly low expense ratio of 0.03%. VFV charges 0.08%, still very low, but slightly higher. For every $10,000 invested, in VOO, you pay $3 per year. In VFV, you pay $8 per year. Over decades, that small difference can compound. So if you're investing in a tax-sheltered US account, VOO is more cost-efficient. But if you're investing in a Canadian TFSA, or RRSP, things get more interesting. Taxes are where the VOO versus VFV debate really heats up. If you're a Canadian investor, here's how it breaks down. 1. TFSA, tax-free savings account. VOO's US dividends face a 15% withholding tax, and you can't recover it. VFV, though Canadian listed, also suffers indirectly because it holds US assets. So either way, you lose that 15%. Result, no real tax advantage either way. 2. RRSP, Registered Retirement Savings Plan. This is where VOO shines. Thanks to the Canada-US tax treaty, US-listed ETFs like VOO avoid the 15% withholding tax on dividends inside an RRSP. So, in an RRSP, VOO is the clear winner. 3. Non-registered accounts. VFV is in Canadian dollars, so you'll avoid foreign exchange fees when buying or selling. VOO, being in US dollars, may trigger FX conversion costs and capital gains when converted back to CAD. Result, VFV is easier and simpler for taxable accounts. Let's talk dividends, everyone's favorite topic. VOO currently yields around 1.4% to 1.6% annually. VFV, since it mirrors VOO, also yields roughly the same, around 1.5%. The key difference again comes down to currency conversion. If the US dollar rises, your dividends in VFV are worth more in CAD. If the Canadian dollar strengthens, those same payouts shrink. So, if you believe the USD will remain strong, VFV could actually enhance your dividend income in Canadian dollars. Since VFV is unhedged, you're exposed to exchange rate swings. For instance, if you bought VFV when the CAD was 75 US cents, and later it rises to 85 cents, your returns in CAD could drop, even if the S&P 500 didn't move much. VOO, on the other hand, is always in US dollars, so you get pure S&P 500 performance without currency translation noise. If your long-term goal is to build wealth in US dollars, maybe for retirement abroad or US spending, VOO keeps it clean and direct. But if you're staying in Canada and want to measure growth in Canadian dollars, VFV is the more natural fit. VOO, pros, ultra-low fee, 0.03% no US withholding tax in RRSP, pure exposure to the S&P 500, high liquidity and huge scale. VOO, cons, requires USD to buy, foreign exchange costs, 15% dividend tax in TFSA, US estate tax exposure. For large portfolios. VFV, pros, easy to buy in CAD, no need to convert currencies, great for Canadian taxable accounts, same S&P 500 exposure. VFV, cons, slightly higher currency fluctuations can affect returns, still subject to 15% dividend withholding via underlying US stocks. So, which one wins in 2025? It depends on where you invest and your currency goals. White tick mark emoji, if you invest in an RRSP, VOO is the clear winner. You'll save on dividend taxes and benefit from the lowest possible fees. White tick mark emoji, if you invest in a TFSA or non-registered account, VFV is the simpler, more convenient choice. No currency conversions, no US tax filing complications, and easy trading in CAD. White tick mark emoji, if you want long-term USD exposure, go with VOO. White tick mark emoji, if you want CAD-denominated growth, stick with VFV. Both will deliver nearly identical long-term performance because they track the same S&P 500 giants. It's not about which ETF is better, it's about which fits your financial setup better. In the end, both VOO and VFV represent the same timeless investment strategy, owning the top 500 companies in America. They're both Vanguard products, built for long-term, low-cost wealth growth. So whether you choose VOO or VFV, you're already doing what smart investors do, keeping it simple, diversified, and consistent. If you found this video helpful, don't forget to hit that like button, subscribe, and turn on notifications for more ETF breakdowns every week. And drop a comment below, which ETF are you holding in 2025? VOO or VFV, and why? Thanks for watching, and as always, invest smart, stay consistent, and I'll see you in the next video.